What are you using $2 billion for when you made $3 billion last year? And when you're about to go public, it smells fishy and it seems like a distraction. You're making billions of dollars in profit. Why do you need to raise $2 billion? This news was kind of interesting. We saw this. ByteDance is looking to raise money at a $180 billion valuation. They're looking to raise $2 billion. ByteDance is in discussions to raise $2 billion before listing some of its businesses in Hong Kong. I mean, why? This company was supposed to be making billions of dollars in profit. So you're making billions of dollars in profit. Why do you need to raise $2 billion? Because to me, this isn't them saying, hey, we're going to let some of our investors sell off their shares, $2 billion worth of their shares. That's different. Then the company isn't raising capital for itself. Maybe it's taking a little bit longer to go public than people thought, whatever. People will take a little bit of a discount to sell their share if, they can get out pre-IPO, whatever, right? There's a little bit of a discount there because it's still private. It's still illiquid, much more illiquid than when you're public and are on the stock exchange. So kind of curious. This article says here, while ByteDance was said to have generated more than $17 billion in revenue in 2019, but this article isn't highlighting the profit number, which they were touting. ByteDance makes $3 billion in profit on $17 billion in revenue. So why are you raising $2 billion? You're going to go do some crazy roll-ups, some crazy acquisitions? I mean, $3 billion in profit. I mean, I would assume this isn't like they're also reinvesting some of this money, which actually takes away from the profit number, unless they're fudging the profit numbers, right? So maybe they made $5 billion in profit and they said, well, we're going to invest $2 billion in these other initiatives. And so then that is an expense and that hurts your bottom line, right? So what are you using $2 billion for when you made $3 billion last year? And when you're about to go public, even if you want to buy a company for $10 billion, you don't need to put $10 billion down in, you don't need to have $10 billion of cash in the bank today. You can go get debt to finance that transaction. You can use your stock, which you're about to IPO with, to finance that transaction. I just don't know what they would want to buy or what they want to use this money for. It just doesn't make sense to me. I think it just goes back to kind of just a general kind of hesitancy that I have for Chinese stocks. And, this isn't the reason why I have hesitancy on Chinese stocks is because Chinese stocks don't have the same audit and accounting requirements that basically any other public company that is listed on a U.S. exchange. So if you're a Chinese stock and you're not listed on the U.S. exchange, don't worry about me. My comment does not apply to you. Do whatever you want. But it's very well known that Chinese stocks listed on U.S. exchanges are not held to the same auditing and accounting requirements that basically every other public company that is listed on a U.S. exchange is required to adhere to. There is proposed legislation in Congress that's actually, both it's bipartisan, Democrats and Republicans that are both, putting forth legislation to help level the playing field, right, and require that Chinese stocks are held to the same standards as everyone else. Makes sense. Just took like 20 years for that to happen. That's another reason why you see more Chinese stocks be shifting their shares to the Hong Kong exchange, for example, because there's going to be greater transparency required from these companies. And we've already seen it bite investors where it hurts, like Luckin Coffee, which Luckin Coffee was no small cookie. That was like the Starbucks of China. Like Starbucks committing blatant fraud. Kind of an issue. Not a small, like big company. Blatant fraud. Cooking the books. Call me skeptical. it just seems odd. You got a lot of stuff going on if you're ByteDance, right? Like TikTok is about to be banned in the United States. Despite what the media is saying, TikTok's in deep trouble, folks. Deep, deep trouble. If this deal falls through with Oracle and Walmart, and there's still a lot of uncertainty around that deal, but the power rests with the executive branch to limit how foreign companies, or actually any foreign agent, operates in the United States, including foreign entities. So there are some like court challenges and things going back and forth. It's really a moot point. As the court process works itself out, I think we will all see that these restrictions on TikTok are very real and will be upheld, at least, in the court of law. And this deal, which is still a little bit wonky, I'm going to be honest. Apparently now what they're saying is that, the way they finagled this kind of TikTok thing was they said that American investors would control over 50% of TikTok. The way they got to that number is that I think Oracle and Walmart were going to get a 20% stake in TikTok. The other 80% is owned by ByteDance. American investors in ByteDance own about 40% of ByteDance. So, 0.4 times 80, that gives you 32%. 32% plus 20% gives you 52% American ownership. So what they were saying is that you are going to need to split up that 32% from the 80. So ByteDance would be holding 48% ownership. 32% would then be divvied up relative to the ownership stakes of the American investors, right? So ByteDance ownership is not this kind of pass-through, pseudo-American ownership. It will be literally, you look at the cap table, it's 52% American, 48% ByteDance, and I think the board is all Americans. I don't know if they figured out if Zhang Yiming, the CEO of ByteDance, will be on the board of TikTok or not. But if he is, certainly, the other 4 seats are going to be all Americans. That is the proposed deal. It's wonky, and there's a lot of stuff, that still isn't public about how it's going to work and if it'll pass and all this. But it is a very real risk to ByteDance. Just all this cash stuff. I don't know. It smells fishy, and it seems like a distraction. Why do you go through all the effort if you're making $3 billion in profit the prior year? Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.